Hi and welcome back to Skylearn. एक दिन a friend of mine was usually going about her routine at one of the companies she used to work in. It so happened that a colleague walked up to her and asked, क्या आप stock markets में invest करते हो? She said, no, why? Her colleague replied, well, if you're interested, let me know. I'll help you with that. The next day, my friend called me and asked me, यार stocks में invest करके सच में फायदा होता है क्या? और अगर होता है, तो कैसे? Well, this is not the first time someone has asked me why they should invest in the stock market. In fact, this is a question that people ask me almost all the time. तो मैंने सोचा क्यों ना आज इस pressing question पर ही एक वीडियो बनाएं. So friends, today we will discuss reasons to invest in the stock market. Now, one of the most common explanations that experts come up with is that equities, which is another name for stocks, is likely to give much better returns than the other asset classes over the long term. Here is an interesting insight. If you see this chart of the Sensex, you will know what we are trying to say. The index stood at 800 in the year 1990, 4,000 in 2000, 20,000 in 2010 and 50,000 in 2020. ये हो क्या रहा है यहाँ? कुछ गणित लगाते हैं to clear this up for you. India has grown its GDP at an average of 6% over the past 30 years. Inflation during the same time stood at an average of 5%, which brings us to a nominal GDP growth of 11%. अगर आप nominal GDP के calculation पर confused हैं, तो let's understand this. Inflation is also considered growth. Let's take an example. Assume you own a soap shop. If you sell 10 units of a soap costing rupees 10, your revenue will be rupees 100. But if you sell 11 units at rupees 10, your sales will increase to rupees 110. Now consider you sold 11 units of soap at rupees 11. Your revenue will be 121 rupees. Now hope you understood why we also consider inflation as growth. But back to the point. If India's GDP grows at 11%, the best companies will be able to grow their revenues and profits at 14% to 18%, right? Assume an average of 16%. Now what is Sensex historical return? 16%. But wait, ऐसा कैसे? ये समझने के लिए 2 साल पीछे जाते हैं. December 2019. Time travel, you see. Now imagine your friend has started a small restaurant. He makes a daily revenue of rupees 10,000 and profit of rupees 5,000. This works out to monthly revenue of rupees 3 lakh and profit of rupees 1.5 lakh, or annual revenue of rupees 36 lakhs and profit of rupees 18 lakhs. Now you think your friend's business is poised to grow sharply. He's willing to give you 10% share in the restaurant business and ask for rupees 18 lakhs. This means he has valued his business at 1.8 crore, right? But you decide to wait. 6 महीने बाद सीधे वुहान से पड़ी इंडिया में pandemic की मार, and the restaurant has suffered. Now your friend is willing to give you 10% stake in his business at rupees 9 lakhs. This means he has reduced the business value to rupees 90 lakhs. Thinking that the business still has inherent value and people will continue to eat out when things get better and back to normal. You agree on the deal. Our friend Stockendra Tipnis has a विशेष टिप्पणी on this, और वो ये है कि good companies generally grow their profits over time, but in the short term their value goes up and down depending on the overall development mood of investors. Stockendra, I agree with you, man. As we saw in the restaurant example above, the friend was valuing his business at a price to earnings ratio, which is the total valuation rupees 1.8 crores divided by annual profit 18 lakhs at 10x. This fell to 5x due to pandemic when the friend took 10% and valued his business at rupees 90 lakhs. Similarly, all good companies grow their profit over time. अब हम वॉरेन बफेट तो है नहीं कि जो 60 साल के होने का वेट करेंगे टू मेक द मोस्ट रिटर्न्स, पर थोड़ा सब्र का फल बहुत मीठा होता है. Hence, in the short term, share price may be a function of the market's mood, but over the long term, it will go up as the earnings keep rising. Finally, how does this boil down to how the Sensex will perform over the long term? The earnings per share of the companies in the Sensex stands at rupees 2100. You want to know whether Sensex will be at 10 years from now. Say for example, earnings will grow at 15% every year and arrive at an EPS of 8500. Multiply rupees 8500 by any valuation multiple between 10x to 30x. Which is the valuation at which the market trades depending on the prevailing sentiment, and you arrive the Sensex value at anywhere between 1 lakh and 2,50,000. Also, अगर आपके पास में इन्वेस्टमेंट या स्टॉक रिलेटेड कोई भी क्वेश्चंस हैं तो ज़रूर हमें कमेंट सेक्शन में जाकर पूछें एंड वी विल डेफिनेटली कवर देम इन द नेक्स्ट वीडियो. Also, please subscribe to our channel to get more such investment and finance related videos and press the bell icon to stay updated on our upcoming videos.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.